Hello, my name is Danae, and welcome to Cash Checker Card, a YouTube channel that will teach you wealth building, financial, and real estate investing advice. Today, we're going to talk about how to buy a house with subpar credit. As you may know, real estate is one of the keys to building wealth. But did you know that you can also buy a house with subpar credit or bad credit? Today, I'm going to show you how. Let's get started. Before we get started, first, let me tell you, you can buy a house with bad credit, but it's a whole lot easier if you have good credit. But don't let that discourage you. When you want something, you need to pursue it. And that's what this YouTube channel is about, pursuing your dreams and goals. One of the most obvious ways of buying a house with bad credit is simply with cash. Now, unless you're sitting on a boatload of money, then you would need to find alternative ways of doing so. But if you were, you probably would not be watching this YouTube channel today because you would not need advice from me. I like to break things down into layman terms for the very beginners. So throughout this video and YouTube channel, you may hear me use the term OPM, which stands for other people's money, which is simply a way of borrowing money to buy assets and consumer items on credit. The first way you can buy a house using other people's money or with a loan, even with bad credit, is through the Neighborhood Assistance Corporation of America, better known as NACA, NACA.com. They finance homes throughout the U.S. in 30 states. What I like most about the NACA program is they're one of the small guys whose sole purpose is to take on the big guys, and you will have one of the best interest rates in America. You can even buy your rate down to zero. Let me repeat that. Zero interest rate. That means if you have a 30-year mortgage, all of your payments go strictly towards the principal. NACA preaches 100% financing and no money down. But just because they preach 100% financing and no money down does not mean there's no money out your pocket, because you will be entitled to pay your own closing costs. But anything as far as the principal is concerned, that's 100% financed. When there's pros, there's also cons. Now, I like NACA because you have one of the better interest rates in America, if not the best. But they are a very slow program. You will not be able to close a house in less than 3 months, and it could take you longer than a year, depending on how fast you move along through the program. I've given you an overview of the NACA program. Any other information you should be able to find on their website, NACA.com. The second way you can buy a house using other people's money or with a loan with bad credit is through the Federal Housing Administration, better known as the FHA. They're a government agency that finance people who have credit scores of 500 and above. However, if you have a score below 580, you will have to put down 10% plus your closing costs. Those who have 580 and above will be entitled to putting down 3.5%. That is the caveat with the FHA loan. Let me be clear, the FHA or Federal Housing Administration is not a lender. They guarantee the loan or mortgage through a list of their approved lenders. Similar to NACA, with the FHA or Federal Housing Administration, you will have one of the better interest rates. However, if you do not put down 20% of the purchase price, you will be required to pay mortgage insurance premiums, or MIP, for the duration of the loan term, whether that's a 15 or 30-year term. Because the federal government, FHA, Federal Housing Administration, is guaranteeing your loan even with bad credit and giving you a mortgage, if you're not putting down 20%, you are required to keep those mortgage insurance premiums until the loan is finalized or refinanced into another lender. However, if you had 20% to put down, you would not have to go through or be required to go through all the red tape of dealing with the FHA. I have to keep it real with you. During sellers' competitive markets, they prefer not to deal with NACA or FHA loans. If there's a lot of purchase agreements coming in, yours will fall to the bottom of the pile. That's just how it is when you're dealing with these programs that deal with people who have subpar credit. That's the cost you have to pay. But do not let that discourage you. Just keep digging in and you will find a house. The third way to buy a house with bad or subpar credit is using a hard money lender. I like using hard money lenders because they have a very fast closing and they will finance a house in any condition as long as there's built-in or equity going into the deal, which means you're making money when you buy a deal, which should always be the situation. But with hard money lenders, they do charge higher interest rates and higher closing costs. You will have to put down more money as well. You can't go into a hard money lender's office and trying to put down 3% or 100% finance because they want you to have meat in the game. Your risk is their risk. Their risk is your risk. So they want to make sure that they're not financing the house and you just walk away from the deal, leave them with a defaulted loan. The fourth way I'm going to talk about how to buy real estate with bad or subpar credit is by going through a real estate investment trust company, or REIT, REIT. They are a commercial investment company that uses a pool of other investors' money that buy commercial property. Just look at it as you buying a piece of the pie. They will have minimum criteria, maybe $5,000 or so. You're buying a small percentage of commercial buildings, sometimes sky rises, sometimes even smaller buildings like laundromats and things of that nature. They will pay you a dividend depending on how much money you put in. The more you put in, obviously, the higher the return, the more money you will make. But it's not based on your credit. You don't have any applications as far as with lenders are that concerned. You just go into the real estate investment trust company's office or website, fill out the application, put in how much you want to invest, and then you are instantly on a real estate company. Real estate. The fifth way I'm going to talk about how to buy real estate with bad or subpar credit is doing seller financing. Basically, the seller is acting as the bank. However, you will be required to come in with a down payment as security and good faith. This ensures the seller that they're getting something. So if you stop making those payments, you lose your down payment and the seller takes back the house. And then they can do the same process again with someone else or sell it the conventional way through a real estate agent, using a bank and so forth. The sixth and final way I'm going to talk about how to buy a house with bad or subpar credit today is doing a lease option. You're basically leasing the house and part of your payments are going toward the purchase of the house as a down payment. The time frame can be anywhere from 2 to 3 years, whatever you and the seller negotiate. During this time frame, you're making monthly payments, leasing as a renter, but a small percentage of the payment will go towards your down payment. Then, when the term is up, you will apply for a conventional loan through a bank or a FHA loan or so forth. This should be enough time. 2 to 3 years should be plenty of time for you to fix your credit and qualify for a conventional mortgage. If you don't, you can extend the contract, negotiate with the seller, or you can back out the deal. But if you do, you forfeit everything you've paid and the seller can do whatever they please. There you have it. I've covered 6 ways to buy a house with bad or subpar credit. 7 if you include all cash. However, all these situations may or may not work for you. Some will, some won't. It's up to you to find the best option. Whatever it is, stay focused, stay motivated, and follow your dreams. I hope you enjoyed the video today. Please give me a like if you do. Subscribe to the page below, and I look forward to seeing you in the next video. Oh yeah, I almost forgot. I would like to add that I also have a blog that covers all of these videos. Everything is in writing. It may be a little more in depth. Visit us at cashcheckorcard.com. Cashcheckorcard.com. Hope to see you soon. Bye-bye.